Morning Beat, everybody. Happy Wednesday. How you doing today? Hope you're having a good day out there. This is a quick stock market update show that we do called The Closing Beat. We'll go over the good, the bad, and the ugly, and working on a new design, refresh sort of thing here to make it a little more jazzy. So be on the lookout for that. But I appreciate you guys stopping by today. We are financial advisors here at Jazz Wealth, open to everybody. We like to teach, so unlike every other advisor that just takes your money and invests it for you, we use our own portfolios here today. By the way, tomorrow night, got a big update for our customers, so a lot of cool stuff going on there. That we do a weekly class, which tomorrow is one, gave it away there. And we just like to teach, right? So along the way, we'll help you out, and of course, you get the personal service. If you have any questions, need any help with your dough, that's what we're here for. So check us out at Jazz Wealth. Our class tomorrow is actually, we're going to do some warning signs that we see in the economy and the overall stock market, share all kinds of geeky stuff with you. And we're going to have some fun, and we're going to show you some probability studies that we did to see all the stocks that have cut dividends. We actually went forward and said, well, what's the probability that these stocks cut their dividends? And we'll show you how we came up with that. So we're going to do that tomorrow as well, show you which ones we have on alert and everything that are very likely to cut their dividends. We'll go over that. Our Jazz Artist of the Week is Charlie Parker. He's got a song called Coco. If you're a saxophone player, you know how hard that song is. Come on. Somebody tell me below. If you ever play the saxophone, go ahead and just try to play that song and make it sound good. It's tough. I'm not a saxophone player, but I know. All right, so guess the Dow. If you want to play along, you can. We'll announce the winner on Friday. You know the drill there. And let's get into the stock market. So we got the Dow lower by 218 today, 20 on the S&P, and 45 higher on the NASDAQ. It was once again one of those days where the big cap stocks did all the heavy lifting, but today it didn't lift the markets. We saw this sort of weakness starting to fade in yesterday. Remember, the markets just bled off towards the end of the day. I showed you the comparison between Monday and Tuesday in terms of the sell-off versus the rally. And today we had the big cap stocks named, Microsoft, Facebook, things like that, trying to move the markets higher, couldn't do it. Eventually, we just faded away, and that's because everything else was really, really weak out there. So we'll see what happens. A little bit of a whack-em Wednesday as we've been playing around there. The S&P remains in this chop zone here. It's decision time for the S&P. You don't like to see that we hold up here at the halfway point. You either want to see the pullback happen, or you want to see us just take off and get going again. But you have a lot of people questioning the risk to reward to the upside. I would be too. So there you have it there. The NASDAQ was the strongest of the day, thanks to your FANG names, your Facebook, Apple, Amazon, Netflix, Google, and then you got to throw in Microsoft in there as well, because if you look at Microsoft today, that did a lot of heavy lifting, up 1% on the day. New short-term highs, by the way, for Microsoft. The Dow was the weakest on the day, and you could blame Boeing. Boeing kind of looks like one of those, if you ever, you go out hiking or something, you climb up a rock, and all of a sudden you lose your footing a little bit, and you start sliding really slow, and you're like, oh, this is like, you're in trouble, and you just keep sliding faster and faster. Well, that's what Boeing looks like here as far as the technical pattern. We've got very much nothing but a drop below us here, and the stock is just sliding off the end of that cliff. Really needs to see, in my humble opinion, needs to see a reversal very quickly, and it needs to be a sharp one all in one day to convince people to stop selling this stock if you happen to be a Boeing investor. But that's what was basically holding back your Dow today. We started off pretty much weak on the day. Overall, we had a hard time getting going. We had ADP numbers come out today. Worst ever, by the way. This is the biggest drop ever in these ADP non-farm payroll numbers, which tends to mean that Friday's jobs numbers are not going to be very good if you ever run a correlation there. What you see on the charts there is, looking back as far as we can look, you see that sharp drop? Never happened before. So we lost 20 million jobs there in just April alone. So that's going to be another chart. Remember, our initial jobless claims chart is a disaster. Our non-farm payrolls number from ADP, very nasty there as well. And it's what we're living with here. So that's it. Like I said, the big cap stocks led the way today, but they couldn't lead the markets higher, just couldn't put up a positive print today. And some of it had to do with treasuries. I don't know if you look at this. I don't talk about this much. It's not very exciting. But if you look at treasuries, here's a 30-year on your chart today. You can see some weakness there. Rates a little bit higher, prices lower. 10-year, a little bit lower as well, although it's being kind of manipulated at the moment. The Fed's helping them out there. But the Treasury needs to borrow $3 trillion. And you go, well, it already sounds like a big number, but it's $3 trillion just for the second quarter. The numbers sound bigger now? To put it in perspective, we look back just to see, well, is this normal? This can't be normal. In the entire year of 2009, that's the last time we saw a number somewhat as sizable as this. But in the entire year of 2009, they borrowed $1.8 trillion. In one quarter, just a simple little 3 months, they've got to borrow $3 trillion. So what do we got? 11 years. and they're basically doubling the amount that they need. That's not a good trajectory right there if you happen to be paying attention to that. Well, anyways, because of that, you had Treasury is a little bit weak on the day overall, and so that's what you got there. We'll cover a little bit more here in our sector update. Also, at the end, I'm going to show you, I got the net buyers, inside buyers of stocks there. So I'm going to show you the stocks. We're going to show you the number of inside buyers relative to the inside sellers to show you the CEOs and people within the company that are buying stocks. Not the mutual funds, but the actual people that work there. So I'll share that with you here in just a little bit. Now, let's take a look at FinTips. If you happen to see our FinTips today, free stuff that you can get from, well, everywhere. We covered Harvard, we covered Netflix, things like that. So be sure to check that out. And on Outside the Virus today, we help you guys out a little bit. I share a lot of geeky stats on that show and everywhere and all the other stuff. But today what we did is we actually said, how could you go out and find some of your own geeky stats that may help you lead to a stock that you may be interested in? I think you'll like what we came up with there. It's very simple, basic sort of thing. But how do you take it to the next level and decide, okay, I'm going to buy a hotel stock because of that, or all right, I'm going to go buy Home Depot, or whatever it may be. So be sure to check that out. Let's go to the sector breakdown today. We're jamming, keeping things going. 8 of 11 sectors lost greater than 1% today. It's not good. Tech sector was your leader today. Did make new short-term highs overall, closed about 0.75% higher on the day. It was a broad rally basically across the board in this sector. However, you got to point out Microsoft is one of the leaders and Apple is the other leader. They make up 40% of the XLK. Both of those were higher today. It's very hard for both of those stocks to be up and for the sector to still be down on the day. So that's what you have there. The XLK, by the way, is now up about 1% year to date, and about 20% of it came just over the last month. Take the last 30 days, add them all up together, you got about a 20% gain. That's impressive, right? Just shows you who's doing the heavy lifting out there. Communication services stocks got stuck right at the 200-day moving average today. This is the third best performing sector, which is not good because it was down 0.25%. Some of the excitement in that space is going to be ATVI. Remember, we talked about the earnings. Let me pull it up for you because I still have it here. Gave you this one on Outside the Virus, I believe, where we talked about the best performing stocks on May 5th alone in response to their earnings. ATVI was one of the had the highest odds, but to be fair, Electronic Arts also did as well. They missed, right? So in the space today, you got ATVI, new 52-week highs. They beat on earnings, good earnings report. EA Sports down 3.5%. They missed on earnings. And then Take-Two was just up with the mix as well. So I had about 2% on the day. Not too bad there. Financials, no love. No love for the financials. That's heartbreaking. So you got 2% to the downside here. The 50-day moving average is kind of pushing that sucker down. Now remember, the financials are relatively weak compared to the market. That's fancy speak for saying the financials are not performing as well as the overall market. The problem is you need the financials to perform if you want them to move higher. Right now, it looks like the financials are moving lower, which spells a recipe for a downward market. Unless that changes, you just can't actually make that happen. Well, it wouldn't be right. I wouldn't ask you to stick around and keep watching if I didn't give you something to go on here. So let's take a look. Currently, what you have is a spread between, are you kidding me? You got a spread between, this is looking back, but right now the performance between the S&P, which is your orange line, and the financials is spreading apart, right? We don't need that. We need them to be correlated, meaning they need to be moving together. Even if not the same returns, they got to be moving together. Right now they're moving apart. S&P was still going up. Financials are moving lower. So we looked at that spread. We said, show us the last time that spread was as wide as it was, and let's see what the financials did. We only went back one last time just because we ran out of time, but you could go back as far as you want and see how many occurrences happened. But here's the last time. It's a little hard to tell based on the way this chart's here, but the last time there was a spread between, or a divergence between the S&P and financials. What happened after that was a 17% decline in the stock market. So notice everything did recover. It all did come back to normal, but financials being weak sort of gave that heads up that the market was going to pull back there. What do we have now? We got financials weak relative to the market. I'm not saying it's going to happen again, just one of those things we happen to take a look at, and it's fun. Utilities was the weakest sector on the day, down 3.4%. That's going to be because of rates spiking higher and the treasuries that we talked about a minute ago, people really starting to notice that's a lot of, money. Right? $3 trillion? I don't need to go over that again. Now, oil was higher. No, lower. Sorry, I was looking at the wrong thing there. Oil a little bit lower on the day, although it almost did go positive on the day. Oil We had a couple things come out today. You had oil inventories. Oil inventories, we saw the inventories of oil, the stockpiles higher by about 4 million barrels, but we were expecting close to 9 million barrels. So it wasn't a drawdown, but we added less oil than what was expected. So the price of oil was a little bit volatile today overall there. And it just basically taken a break here. If you're a technical trader, right at the 50-day moving average, keep in mind that over the last 2 weeks, just look over the last 2 weeks. It's an impressive result there. Over the last 2 weeks, oil has had its best move ever in history. Ever in history. 150% rally from lows to highs. It's never done that before. So imagine that, right? I normally talk about running up a hill and taking a break. You just ran up a massive hill you've never run up before. It's the steepest of all hills. You've never even seen it. You're tired. You're going to take a break, right? So it's totally understandable if oil wants to take a break. Okay, you've got 7 new highs today. I bet you can guess one of them, ATVI, right? Up 6.3%. You've also got PayPal in the mix. They did report earnings after hours. Good earnings for them, by the way. Venmo doing well. Revenue growth was up 17%. Overall, Venmo's kind of killing it because people are using that more instead of actually handing cash out, which is a good thing because the Fed's got $3 trillion of it coming their way. You've got 1.2 billion in payment transactions. That's up 20%. If my numbers are right there. Yeah, numbers are right. How about that? 7.4 million new active accounts. That's growing at, that would be 250,000 new accounts a day on average. Yeesh. Okay, good job, PayPal. So that's that one, new 52-week highs. You got Rollins hitting new highs as well. A little extended in the short term, no big deal. And ServiceNow, it did close lower on the day, poked to new highs. You can see the exhaustion there if you're a technical trader. No need to go over that. You've got Cincinnati Financial hitting new lows again. I don't get it. Down 10%. Probably some of the AIG news and insurers paying out more than they're bringing in right now. That'll change, but for now, that's a discount right there. I'm not telling you to buy it, just saying. And the other new low today was Southwest Airlines. Just horrible. And I'm told I have something to share with you here on Southwest Airlines. Oh, look at that. Southwest Airlines, so if you look at this, it's not great. I'm going to just take creative discretion here. I'm going to go a little bigger. There you go. So Southwest Airlines, new 52-week lows. Price target, the average price target is $40.72 at the moment and declining. What we see down here at the bottom is we're basically just showing you, you've got 64% that this stock has to rally just to get back to the average price target. That's a lot. So what it leads you to believe is, well, there's very likely going to be some downgrades on old Southwest Airlines. Not looking good there, but I'll tidy this up because they did so good putting that together for me. There you go. Nonetheless, Southwest Airlines, new 52-week lows on the day. And that's it. There was just those two 52-week lows. No problem from there. T-Mobile USA down, well, 2%, but I believe up after hours. They reported earnings. They beat on earnings, missed on revenue. Ad revenue beat guidance, or beat expectations. Guidance is gone for the year on that one. Peloton, apparently everybody's out there working out. It was up 5% before earnings here. Subscribers were up sharply. The number of hours people spent working out was up sharply. They're paying all their employees, by the way, and will continue to. And they're also paying all their rent. So they made it a point to say, we are not going to try to skip out on rent or make any sort of new negotiations with our landlords and all the fitness studios. Fitness subscribers up 94%, which is good. Bottom line, they did good. Not so good as Wynn. Wynn, not good. So Wynn missed on earnings, missed on revenue. Macau is open, but nobody's coming, so they're not seeing the revenue increase there yet. They cut their dividend for the rest of the year. No more dividend for Wynn, no more guidance at all. Lyft actually did well, very well compared to what was expected. They still lose money, so don't let me excite you here. They beat on earnings and revenue. They still lose $1.31 a share. That's a loss. We're pushing billions here. 2.7 billion in cash. Revenue per active rider was up $45. There's no period in between that, so it's $45. Wow. The problem is the current quarter is going to be tough for Lyft. Their active riders is basically just halted, come to a grinding halt there, and we know that, right? Things are closed down there. All right, what else we got? I'll share a couple more things with you, and then I want to share this net new buyers of insider trades there. Earnings tomorrow, you got Bristol Myers, Anheuser InBev, Bud is the ticker symbol, Danaher, Hilton, JetBlue, Norwegian Cruise Lines, Teva Pharmaceuticals, Baidu, Booking Holdings, Microchip and Uber follows Lyft today. For dividends there, you've got $1.63 coming out of IBM, Norfolk Southern paying out 94 cents, Walmart 54 cents, Wells Fargo 51 cents, MetLife 46 cents, Starbucks 41 cents, Pfizer 38 cents. That's all I'm going to count. There you go. That covers all of that. Let's do this here. We talked the other day about insider transactions, CEOs, CTOs, people like that buying up their stocks. What we did is we ran a scan. From February 19th to May 1st is what we looked at the entire S&P 500, and we said from what's known as the virus window so far, from February 19th till today, we're still in it, we looked to see all the stocks where there were a net positive number of buyers versus sellers, if any at all. So for example, on the chart over to the right, you see Regions Financial is at the top. They've had 75 insider buyers, inside transactions that were resulted in buys, and no sellers during this virus. So we call them virus buyers, right? If you look down the list, you can see a whole list of different names there. I don't need to rattle all of them off for you, but those are the list of where CEOs, CFOs, and such are deciding to buy their stocks. Now, if you look at the entire S&P 500, 58.4% of the S&P 500 has a net amount of buyers relative to sellers. 8.2% has more sellers than buyers, and the rest are in the middle there with no transactions at all. So I don't know if that's the best way to show it or if that's interesting to you, but somebody asked the other day and I thought, I know how to put that together. I can make that happen. So there you go. Hopefully that doesn't spawn a whole lot of questions about data, and the research team is just going to be all worked up there. So yikes. All right. I will try to answer some of your questions and then we'll call it a day and give you guys big thanks. Beyond Meats, yeah, good job on them. Yep, well done there. So Beyond Meats with their earnings, they hinted at more McDonald's, they hinted at all kinds of stuff. Stock was up 26% on the day. Yep. You're welcome, Zach. You're thinking you're going to buy this market, but you're going to wait for a little bit of a pullback. All right. Yeah. We're going to cover that in more intense detail tomorrow night for our customers, because we do have to do that. Thanks to all the virus buyers. Yeah. Thanks, Mr. Regions. Appreciate you taking some of your big salary to buy your shares. Yep. Oh, I like it. That's what I've been saying around the office. People are like, did you hear like New Jersey's closed for another 30 days? I'm like, put on a mask, get back to work, right? You don't want to do it, stay at home. I love it. I love it, I love it. What's your opinion on Berkshire Hathaway? Well, they've been in the news lately. They had a big loss, so you can understand, just like any other company, if they have a big loss on the books there, the stock's going to sell off a little bit of a repricing overall for the stock. I don't think it's a catastrophe or something that falls off of a cliff here, but yeah, I mean, if you liked it at 190, got to love it at 172, right? Mm-hmm. Any chance of Southwest Airlines going bankrupt? Yeah. Yep. Why is the game guess the Dow? Why not guess the S&P? The Dow's more fun. Plus it you know, rolls off the tongue. Guess the Dow, right? Guess the S&P 500. I don't want to say that every day. I like it. You think Tyson's a good value on this dip? I mean, obviously that's hard to say if I think it's a good value. I think if in the short term you're looking for an entry, I think you hold off, right? I don't see any reason why you would want to dive into the stock here when it sort of looks like Boeing. Remember falling off the rock and it's trying to hang on like a cat on a side of something and it's scratching all the way down. You know what I'm talking about. I like it. Yep. Do you think MGNX is going to continue tomorrow? If you own it and you're asking that question and you didn't sell today, shame on you, right? If you own a stock and it bounces 230% in a day and you didn't sell, you deserve whatever tomorrow holds for you, right? Simple as that. How often does that happen, right? If you buy a stock and it goes up 2%, you go, well, I was really shooting for 8, I'll hang in there, I think there's a good reason it'll go higher. If you buy a stock and it goes up 10%, you go, whoa, okay, that was one day? Gonna have to think about it. I gotta take something off the table. If it goes up 250% or 30% and you don't do anything, I don't know what you're waiting for. Even if you bought it like in February and you have a 180% gain, I can't tell you what to do, but I would take the money and run. It would have taken me a half a second. Yep. Do you like the small cap value? You got to be careful there. You got to be a stock picker, especially in small cap value right now. Value in general is having a rough patch. You got to really see the all clear sign for the economy for those to pick up. Small cap value is even more dangerous, right? Obviously they're a value for a reason. You got to check to make sure they got enough cash, they're going to make it, they're not impacted too much, everybody's working. So you definitely, if this is a stock picker's market, like it or not, it is. Even Kramer the other day said, sell your index fund, you got to go pick stocks. But in particular, you really got to do your research there. It's a tough one. I don't think that the question is how long does it take companies to reinstate their dividends? I don't think that there is anything I can share that would say on average it's 3 quarters or 4 quarters or something. That's a really good question though. I would do it just to see, is there any sort of average we can go on, look through prior recessions or major pullbacks, but I actually wouldn't know the answer to that one. You sold it faster than you bought it. There you go. Good for you. That's the right answer. Yeah. You think GE's going bankrupt? I hope not, but anything's possible. How is there no public pushback against the growing debt? $3 trillion. I don't know. And that's $3 trillion. But what if Nancy Pelosi gets her trillion to support the states, which they got to do something. But what if that's another trillion? And then what if they come up with the second stimulus package, which they're actually physically debating right now? Holy cow! I mean, that's over 5 just in the last, could be in the next 2 weeks. Yeah, that's crazy. Do you think Netflix will keep climbing? Well, I know that's a crowd favorite right now. That's the tough one. You got to be careful on these because when there's a small group of stocks that are sort of lifting the tide, right? When people decide they want to take profits on those, it'll hit you before you even know what happens. So you want to be careful about positions you have. I would be careful about positions you have. Know your exit point before the stock starts falling. That's probably the best advice I could give you. If you start watching it fall and then you're saying, well, let me think about it or whatever, you're likely going to be holding it on for a while. Yeah. Oh, I know the debt's higher than $3 trillion. I'm just talking about the $3 trillion they need for the second quarter. Yeah, that's what makes it so intimidating. Yeah. Oh, yeah. Made a lot of money doing the opposite of what Kramer says. Well, in the long run, you would be, if you followed exactly, in the long run, you'd actually be a loser. But maybe you found some good ones there. There have been many analyses of him, and he comes out on top every time. Not by a lot, but he comes out on top. That's all you can ask. Industrials down on the day, 1.3. A little bit of a laggard there. I think industrials have every reason to pull back. They're not as strong as the market. They're obviously a sensitive area. So you have every reason to expect that to pull back if that's what you're hoping for. Yep. Yeah. Just print the money. Can you explain how the S&P is weighted? Actually, I've done a class for that. In the dojo, did a class to go over that. And then once a month, I make it a point to sort of illustrate the current weightings of every sector, where they stand relative to the moves, and the changes of each sector over the month. Now, I can't say every month, but when there's some significant change, I include that in our weekly emails so people know, like when energy took over a little bit or lost last year. I like to point that stuff out just to show healthcare gaining more traction, because it's an ever-evolving thing. But I could maybe do the video again just to... I always never know with that. Like if I feel like I did something like 6 months ago, do I do it again, or is it not worth watching? So that's a tough one. I wish there was like some rating system somehow where people could just say, this is what we want to see, It's actually a good idea. All right, not going to get into that one there. I just look at the stats with old Mr. Kramer there. So I don't see anything that says otherwise. Other than that, I think I have, I've covered it all. I've got everything I wanted to cover. That's it. I'm out of paper. I'm out of things to say. Enjoy the rest of your day. Thank you so much for stopping by. I do appreciate it. And we'll see you again tomorrow. Do this all over again. If you're one of our customers tomorrow night, we're going to do our class. We're going to go a little nuts tomorrow. I'll keep it simple. I always do. But we've got a lot to cover and serious talk. We've got to have serious talk tomorrow. So I'll see you then and enjoy your day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.